Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Did you guys miss me? Hold up. We gotta get some music in here. No, that's not what we want. Pause. We want this. There we go. All right. Good morning. Yeah, we do have. So let's see here. I'm just coming in for the first time this week. Let's see here. We get some flash PMIs today. Richmond Fed, US 2-year note auction. Gotcha. And interest rates are at 4.86. All right, let's come and look at the charts. Kind of talk about what I missed. So, yesterday, Treasuries started on the bearish foot again, but then Mr. I can't remember his name came in and said that he covered his short, and that sent the indexes jumping up here. Now, I don't necessarily consider that particular piece of news like a significant thing. Like, okay, he probably already covered his short down in here. Obviously, people will follow him, so that creates a flow, and we definitely would want to buy on that. Yes, Bill Ackman. But from here, does it matter now? Probably not. But the bigger thing here is that we are really close to 5%. And like 5% is the cap rate that you get for like owning property. So, of course, there's still reasons to like buy and rent homes because you can use leverage and all of these sorts of things. But especially for like the really big guys, why invest into housing when you can get the same return just sitting in treasuries, right? So 5% becomes a level that has a significant amount of support / resistance, depending on which instrument you're looking at. So I think that we may continue to see some selling from foreigns, from the Bank of Japan, etc. So don't discount that there could still be some bearish flows that come through, but we are likely to see some support around here. And I think that was part of what you were seeing yesterday. Meanwhile, in the S&P 500, they've been struggling, but they did pull out a buy day yesterday. All right. Oil. Yeah, oil's kind of all over the place still. But I guess that's good as long as we're not going back up to $100 right away. Gold and silver. Well, gold and silver are looking a little bearish this morning, but man, they've had a really good run the past week or two, right? And here we got copper. Copper continues to just kind of be sideways. There has been some days that looking good because data from China is improving, but copper continues to languish overall. And then we got Bitcoin, and Bitcoin is seeing something crazy. And in fact, over the night, we're seeing some really, really wild stuff. I don't know if there's headlines over there. There could be headlines overnight in the Bitcoin market, but cryptocurrencies have just been, after 30,000, they've just been taken off, right? If interest rates back off, that could help cryptocurrencies. So they may just be reacting to the interest rates in the same way gold and silver are. I don't know. We'll see. Well, and I don't even know 100% if gold and silver are reacting to the interest rates, but so that's kind of where we're at. And then again, for the news today, we do have S&P Services PMI at 7:45 or 9:45 Eastern Time. Richmond Fed Composite Index, which is a relatively important number, and the 2-year auctions. So it's important to note, again, we've discussed this before, but I just want to make sure that we're all on the same page in case we got new people and so forth, that the changes that we've seen in interest rates lately do not appear to reflect changes in inflation expectations. And so for the widely followed model that we look at, if it's not inflation expectations, it's term premium. And that term premium could be due to things like the Bank of Japan having to sell assets to prop up their currency, etc., etc., etc. So those flows that are causing the treasuries to sell would still be out there. Okay. So I think that one of the knee-jerk reaction that you would have, people that don't have our understanding of the order flow and what really drives the markets, would say, well, from a fundamental perspective, they shouldn't be able to get above 5% interest rates. Well, if there is a flow, if the Bank of Japan has to sell a ton of their inventory, or if China is getting rid of a ton of their treasuries, they're going to sell, then that flow is going to come through. We don't necessarily want to stand in front of that, right? We want to let them get everything that they have out of their hands, and then maybe we buy it afterwards, or we go with that flow and we sell with them, right? But just be aware, there could still be some really big sell flows in the markets, but overall, I think that we would be favoring longs in the treasuries here, right? So that's where we're at. I hope you guys had a good day yesterday. I drove up to Canada and back by car just so we could pick up a dresser, which was kind of silly, but that's what we did. And it was a pretty uneventful drive. I'm definitely, when I do my workout today, I'm gonna work out hard. Work that butt out hard because we've been sitting on it for 3 days. And lots to do. So I do want to make sure I can walk away here just in case. My wife has been sick, so just in case she has any trouble getting the kids off to school on time, I want to double check on that. Also, let's come over to Discord here. Okay, let's see here. I see somebody needs pictures posting permissions. There's been a lot of good talk with Brando and crew in the interest rates channel. Really like to see what we got in there. And let's see here. Has our bot been banning people? That's weird. Oh, I need to come like way down here. Okay. Oh, there was somebody this morning tried to impersonate me. But it banned them. Cool. Cool. You know, I do see the flows looking slightly supportive, but activity is pretty dead right now. So probably want to be on our toes. I think that we might see some buying here. Okay, I think we're all good over there. 5-year bounce. We are seeing a 2-year auction today, so we might see some odd activity over in that kind of short end of the curve. Let's just check the zero hedge to see if there's any interesting... How Israel is losing the propaganda war to Hamas? Kind of seems like it is, to be honest. Like, the really engaged people online, it seems like are with it. But when I look at the news and like what gets posted on news outlets, it kind of seems like they're falling for the Hamas propaganda again. Bond yields have more to go as retail wises up to inflation, is the story on Zero Hedge. Well, we should read that. I don't know. The prices that they're giving us, if I want to do something, are kind of a little difficult to work with, I think. I always feel like that, don't I? Let's read this story, authored by Simon White, Bloomberg macro strategist. U.S. yields likely need to climb further as retail investors become increasingly attuned to hedging inflation. Bond rallies are likely to be transient as the primary trend for treasuries remains down. After decades of real and nominal levels being almost indistinguishable, it is not a great surprise that both professional and retail investors will take time to adapt to the new normal. Countries used to unruly inflation like Argentina are well accustomed to their currency's actual value and not the official value, and how rampant price growth can decimate the real value of financial assets. In the wake of the initial burst of U.S. inflation in 2021, there was a spurt of interest both among retail and professional investors for real assets and their proxies such as commodities, as well as energy and industrial stocks. That has since waned somewhat, but inflation is unlikely to return to a low and stable regime anytime soon. Households may be picking up on this and are investing accordingly. Flows into the largest commodity ETFs have been rising this year, and flows into ETFs of inflation-protected securities, which peaked in 2021 and then fell sharply, have also been steadily picking up. Long-term inflation expectations of households, as measured by the University of Michigan survey, are markedly higher than what is expected by the Federal Reserve or priced in by the market based on break-even rates and CPI fixing swaps. Typically, household inflation expectations lead bond term premium, which is mainly driven by the market's expectation of inflation and inflation volatility. By around a year, term premium has been following household inflation expectations higher this year. Let me see if I read that again. Typically, household inflation expectations lead bond term premium, which is mainly driven by the market's expectation of inflation and inflation volatility, by around a year. Term premium has been following household inflation expectations higher this year. So, okay. Yeah, except for that, the term premium has risen a lot more than the term premium is right now. But in this cycle, the sensitivity between inflation expectations and term premium is likely to be higher as the household sector becomes the de facto buyer of last resort of treasuries. They're the only sector absorbing U.S. treasuries as the Fed, U.S. financials, and the rest of the world reduce their exposure. As the marginal buyer, they're likely to demand a higher yield than the market is currently offering to compensate for the greater inflation risks they foresee and are beginning to hedge. I did not 100% follow that story, but he maybe has some points. It would be interesting. I mean, he puts me onto this thought that, like, you could see a situation where the public is largely buying treasuries, even though, like, China and Japan and other countries are selling them. That would be a really interesting dynamic. I'm not sure if I would want to be the buyer in that situation, right? Well, the treasuries have come back a tick or two, but it's not really changing rates much. Lips are super chapped today. I apologize. I mean, the flow is net long here by about 7,000 contracts, so... So I'm going to test the market here. Oh, no, never mind. I don't have to. That's interesting. 5 contracts buying into the micros here, and then 3 on the other side. So a little slippery. Okay. So there's a little bit of fight going on there in the treasury. I'm not 100% sure what to make of it. So I think that I'm going to let it do its thing for a little bit. I am seeing some flattening in the curve. See, they want to go bid at 12.5, but they're having a hard time holding it for some reason. I'm sure that a good solid bid will come along here and it'll kind of flip things, but for now they seem to be struggling. Ah, there you go. You can see the 30 here really drove there, which is what's pushing the micros down. Almost immediately flips. I think the evidence is definitely towards a bull flattener at the moment, which means that the treasuries move up overall, and we see the 30-year move more than the others. But you know, they just broke a new low, and I really don't like the way that, sorry, a new high in the treasuries, let's say. And I really don't like the way that they reacted to that, because it almost immediately came back. At the very least, I feel like you need to get a good price to be messing with this right now. I suppose 485 wouldn't be bad, but look at that. Oh wait, look at the aggression that they take that with. The market maker took that in the micro. Pretty confidently bid that. A wedding. Oh, it wasn't a wedding, it was a funeral. It was okay. I don't know. I kind of went into quiet mode, so I didn't really. Pretty uneventful. The average new monthly mortgage payment is 52% higher than the average apartment rent, the most extreme difference since 1996. Some volume hitting there. Market maker took it. I'm a little concerned that the flows could flip on us here, but let's see. I'll just say I'm a little concerned that maybe the market maker is in charge here. There's a good fluctuation in the market. Well, I would consider Bill Ackman closing his short to be, quote, news. For us, it's news, right? It was news when he got into it. Tell you what, he must have made a bundle on that trade. So now we're back to 845. I was, you know, 85 was looking good. I didn't want to take it when it went bid so strongly, but then after that, but it never gave me a chance to get back in. It does, sure feels like, you know, we had some pretty decent flows coming in there that just completely disappeared so quickly. Okay, well, there's 485 again. 5-year ticked down. 1 from that. The bid offer is pretty nonchalant there. Kind of suggests to me that the market maker is playing it like it could go either way. Seems hard for them to hold 8.5 in the micros, though. See, it's so far it's been like, if you were short 485 in the micros, you would be sitting with excursion most of the time. But I'm not sure if it's actually going to go. It's acting a little iffy. It's kind of like they made a decent little push there, and now they just backed off, and now they're kind of starting to form a little bit of a liquidity hole instead. The released hostage says Hamas tunnel network looks like a spider web, huh? Because Israel released a map of the tunnels that they knew about, and I was kind of like, I think there's a lot more than that. Yeah, so the market makers seem a little bit sensitive there. So they're probably looking at correlations here. Not that I see any obvious correlations with the dollar and the 6J, but I do see the dollar kind of looking a little strong. And again, a bunch of guys in the micros took some trades there. Okay, that tick up seemed to really affect the offers there. Although the way the micros reacted to that one was a little strange. Seemed to see volume going both ways off of that. Okay. There's the top of the hour. We are starting to see a little bit of buy orders flooding back in here, but nope, 12 doesn't hold. Does 11.5 hold? Okay, there was a few pukes into 11.5, but 12 goes bid again. Weak bid. A bit of maybe iceberging going on there. And a lot of volume coming out here in the 5-year. And that volume in the 5-year looks pretty supportive. Of course, if we do have a move up and we continue to be bull flattener, I would expect the 5-year to be kind of like the lagging ones, so. Yeah, I'm with you. Octavia says 16 is a good target in ZN. If they were to like have a significant breakout here, I think that 16 is an extremely likely spot for them to target for sure. There's a I mean, it's interesting that volume at 15, because that doesn't seem to correlate with any significant level that I have. It is about where the buyer average cost basis is, though. But there's not like a significant pivot or higher low there or anything. So having that amount there is unusual. It's kind of an outlier. Now 12 iceberging. Say those bids in the 30-year are not looking too shabby either. Of course, then you have to get through those big offers that are up there. Okay, 5-year takes 17-quarter offer for a moment, but then doesn't do anything with it. Seems like the players that were trading back and forth there are maybe done, and now it's ticking up again. Oh, no, the seller. Iceberg at 12 is not done yet. How big is this iceberg at 12 going to be? I think it could be a 7K? I feel like that 10K would be a little bit too big for this situation, don't you? But it's entirely possible. But 10K is usually pretty big iceberg, right? Well, there's 6K. Here says that they want to go higher. I'm gonna say it's unclear. I would say that the past flows are best supportive of a long, but they've been going sideways for quite a while, and I don't know if we have enough autocorrelation in there for us to be able to tell that it's obviously going to go higher or continue. If it does go higher and they get a good breakout, then it will probably seem obvious later, but at the moment, I think they're unsure. And you know what? The market makers seem a little unsure to me too, so there's a good bid at 12.5. wasn't super strong, but they put 700 up. That wasn't bad. And you can see the 30-year. Okay, some orders going up into the high again. It's the third time they've touched that 30, by the way. They had to take 300 to take that 29 last time, though. So it seems like they're still kind of struggling to break out. It sounds like Futures Trader 71 is off all week this week. Won't be back until Monday, October 30th, really. Here's 12.5 again. Okay, some iceberging at 29 that time. That's encouraging. And the 30 is starting to pull away a little bit now. There we go. It goes bid. And new high in 30-year. I didn't punch through it, but it did touch new high. If there is a meta order bid in here, they're being awfully sneaky and nonchalant, because so far this kind of just seems like it's kind of pushing higher, but it's just not quite going right. So that kind of behavior makes me a little bit nervous. Of course, if it's not coming through, there was some big orders in there at 12. Remember, there was the 6K, so that could just kind of like, you know, keep us stuck here for a little bit. Let's see here. When did that move higher started? 619. Oh, so about at the open. So for the first 15 minutes. And it's been about 20-25 minutes since then. So it might just be too early for the treasuries to make another big move. More iceberging at 12. So we had 6 there before and 2 there now. That's total 8K at 12. Well, now that they've tested it, I think that's gonna... I think the market makers might react to that. Let's see. Oh, actually, they're able to get 12 to go offer. And 11.5 just falls easy. That's definitely not what we want to see. I'm not going to say like it's a complete disaster for us, but definitely not supportive. So now that's like the second time I'm saying, you know, that I'm not liking something that I'm seeing. They're past 8.5 now as well. I think... compute this. Oh. Okay. I had a good run, but ultimately, I think that we didn't have it. We went 4 favorable and 11 against us at one point. Jeez. Well, so after something like that, it makes I'm often find myself going right back into it and thinking, well, it could do this and this and this and maybe, but really the action that we just saw there kind of suggests that we don't really have the kind of flows to support the sort of trade that we like to make, right? See, now that they've done that, they're gonna kind of do this thing like, you were right all along though, Seth. Don't you want to get back in again? Well, 11. Come back to 11 at least. Yeah, we are in the height of earnings season. I honestly don't pay too much attention to those. Except for the big ones. But it's not something that I think about in the morning. I guess we have Microsoft today. Microsoft, Google. General Motors. Oh, there's actually 3M. There's a lot of really big ones, actually. Evans and ZV was the wall of terror. Is that what it was? Is they didn't want to touch Evans? I might be right. Because what we saw right here was not a collapse of the short of the long trade. It was just kind of like a market making bump, I think. But again, like if we were really seeing a good, strong meta order coming through here, I don't think that we would have seen that. Of course, maybe it's because I was just like way too early. Because they may try before the S&P 500 opens here, right? Yeah, see, that's not. That kind of looks like a bunch of speculative longs puking. The move yesterday, was you talking about the move in treasuries off of Bill Ackman's comments? It's kind of funny how strongly the treasury market has started to move off that. I mean, when he got into that, like the market moved, but it wasn't like super crazy. So the market like going big when he said that he got out. It's kind of like, okay. And like, it's funny because to me, like, of course he got out. Like, he made a ton there. He caught that whole thing. He caught, I think, more than a 1% move. Or I think he got like more than 100 basis points. Or sorry, 1,000 basis points off of that. Like, 5% is going to be big support. You want to get out. But that doesn't mean that the selling flows are going to stop. Because, I mean, the selling flows weren't him. You know, he had some really good flow last week to exit at 5%, basically. So, of course, he got out. So I was a little curious how much. It's kind of like if he did well, now all of a sudden people start following him and his impact starts to become stronger, right? If you're posting a link, I can't see your links. You'd have to put like spaces around them, or, you know, it sees the .com and it goes, oh, that's a link, and then won't let us see it. Okay, so there's 10 again. There's 9 wow, and quite aggressively so as well. I guess we should have taken the opposite trade, huh? It would be 15 ticks. That wouldn't be that bad. So now I kind of have to ask myself, do I want to sell? Well, so far what we're seeing here is a reversal of the upside flows that we saw, but it is not breaching to a new swing low. So there probably is a little bit more support here. Are you hopeful regarding tech earnings? You know, I don't know if I really know enough to be able to comment intelligently on tech earnings, to be honest with you. The one thing that I'm kind of keeping track of is that the blackout window for buybacks is ending. So, you know, we're getting into the period here soon. If not this week, in the next 2 weeks, where the flows should turn bullish going into the end of the year. You flipped and burned at VWAP. I'm pretty proud with how I dealt with that. You know, like I said, this is the second time now that I'm saying like my read of the flows wasn't positive. And given the situation and how tepid it was, I think that was more than enough to get out of something. Wish that I could have limited it to -5, but that's okay. You know, we limited the damage. But I'm not seeing enough of a thing for me to want to take the other trade and try and press for like new lows. So I think that I'm just gonna kind of be hands off here for a little bit and see what it does. You can see as they've come down here, it's been a pretty healthy amount of trade. So they're selling it, but there's actually more bidding on it than. Well, we'll come back and look over here. Okay. Cumulative delta moves up Cumulative delta moves down. The magnitude of these two moves are the same in terms of cumulative delta, but not in terms of price. And that reflects the larger bids propping the market up. We an inside day. I don't know if that is enough to say there's like a large meta order sell in the market, yada yada yada. But well, that's why you don't use cumulative delta. Well, yeah, you definitely don't want to use it as a signal, right? So the whole thing was when we saw this. Okay, that's a good meta order. That's definitely something that, hey, could it go sideways and then there be another leg for it? Yeah, that's kind of what I was betting on. But it didn't happen. It kind of looks like this is more of a range-bound market maker's market. But there is somebody buying it. There is somebody buying it. And just, you know, who knows? It could go down to new lows, and then things could get a little spicy. Right? Because if they do get down to new lows, there's probably going to be a lot of people being forced to cover and stuff. Well, coming over here, there it looks like there's an iceberg at 07.5, so the level break setup is right there. While we're at it, what is the yield curve doing with this? It's overall, I'd still say it's flattening. Maybe they're not buying in terms of open interest, but close. That's definitely possible, huh? Because lots of players probably still short. Only we could see that. We could know, and then we could probably make a pretty good... I think that would really change our view of the market, depending on which one it was, right? I mean, I suppose that I would lean towards that we should see covering in this situation, the profit taking down in there. But what if it's not? What if it's not? What if it was new positions? That change your opinion of things? What if all of this selling was new positions? If open interest was increasing as we sold? Okay, guys, well, I don't know if this is going to go lower or not, but I'm going to take a break here and drive the kids to school, okay? So we'll be back. All right, I'm back. Well, I missed a little bounce there, didn't I? But it was kind of like, because of that shift in cumulative delta and everything, just the fact that there was bids and everything did kind of make me suspect that we would flip, So now that we've tested the downside, and I continue to see buying in both the 30 and the 5, so... Okay. That did not go so well. The way that played out kind of almost makes me want to just dump it right away. You don't want to get taken that aggressively. I would say it does look a little bit, I'm going to say congested here. Like there's actually been some quite a bit of trade both ways around 10. So, probably should have been a little bit less aggressive there. Okay. Yeah, it's all over the place. Oh, you know what? We have this news coming up, though. That's... I'm looking for a reading of 49.9. I'm kind of thinking that PMI, though, might, like there'll be an initial reaction on it and then the market might ignore it. Kind of get the feeling that there's other stuff going on today that, flows that don't really care about that. Unless it's like a huge outlier. But the S&P PMIs are never like that. Looks like I'm going to be a degenerate and gamble on it, though. Yeah, higher number would probably push the treasuries down. Well, like I said, the S&P numbers, because they're a little bit like more lagging than like say market or whatever the other PMIs that you get. The S&P number is usually not like a huge beat or miss, right? And it doesn't affect the market as much. So I would consider it a tier 3 number usually, except for that PMIs have been really important as of late. And they are polling for it, so... I actually do think that it's likely to be slightly under expectation, though. We'll see. Ouch. Okay, we got 50 spot 9 versus 49 spot 9. Well, lots of volume there at 0404 half. Wow. I don't know. Do we care that it's above 50? So now I'm kind of questioning myself. Like I said, well, I don't think it would matter. You know, that might be a number that it comes and there's the initial reaction to it and then they kind of don't care. But I'm already kind of questioning that theory. Big time. Yeah, level above 50 does mean expansion. But I mean, the expectation was 49.9, so it's like... was both services and manufacturing were in expansion as well, because manufacturing was 50. Yes, sell on good news, yeah. We'll definitely sell the treasuries on the good news, right? Damn. Okay, so there is a hole here. Say that's coming back pretty strong. Basically, on high interest rates, good news sometimes are bad because it implies that the economy is not doing what the Fed wants, and that is the economy relaxing to prevent inflation. Yes, exactly. Economy too strong means that the Fed will have to raise interest rates again. But I don't think that particular number was like, okay, if it was like 55, then I'd be like, holy crap, what the hell? Wow, inflation is going to be coming out of control. The Federal Reserve is going to have to be really aggressive, yada, 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 right? That's not that. That's, you know, I do think that there's still profit taking over here. So I definitely, you know, I took a gamble and I was wrong, and that's okay. Now let's try and manage it. And I think that there might be a little bit more we can claw back here, so let's see. Okay, well, there is a little bit of liquidity there at 07. I'm not seeing them like clash into the liquidity yet. It's just kind of like the market orders have kind of petered out. But when I come over and I look at the Japanese yen has almost completely recovered its losses. So too fast. This is too fast for me, man. Okay. So it depends on the, yes, it does. Although I would say that as a general rule, good news is bad. That's the way it's been pretty much the whole time I've ever been trading. At least for the treasuries. Well, this is not cooperating, is it? Could have gotten 20 at one point, and I was not paying attention at all, and now look, it's gonna stop me out. Fuck. Took too long of a break, that's what happened there. Been gone 2 days, 2 trading days, coming back. A little rusty. Because it was a little weird of me to have been, forgotten that the news was coming up, and then when I realized it, not tried to get out of it. It kind of said, oh, I don't really like the prices that I'm getting. I don't think I'm gonna. So I stayed in it. That was the wrong call. Obviously, if it had gone my way, maybe it would have been really good, but. It's actually, I feel a little embarrassed. When I feel a little embarrassed, that's usually the time to just not place anymore for the day. You're gonna go for the full data package. I feel like the full package is worth it. I feel like you just you don't get a very good view of what's going on if you only have one. I mean, I suppose you don't necessarily need to get full market depth for all of them. But like, if you can't even see what the price is of these other instruments, it kind of like flying blind. Yeah, well, the treasuries have really been affecting the market lately, haven't they? Oh, see, now it's like, haha, you should have held on, Saf. Because I kind of think the scenario I was concerned about is coming through here. Right? Where the flows kind of start to turn long. I guess we're not actually seeing them turn long yet in the 10-year, but that right there was a little bit encouraging. I don't know. I don't like that. If I put out a test order and it immediately fills me, I can kind of feel a little wary about that. Why do I never execute an ES position? Because I don't like the risk, and don't really have a very good edge over there. Hmm. Hmm. Yeah, it's lots of trade both ways there at 0506, and it's just kind of like 500 contracts go and clears it. See that? Like it's just pulling all over the place here. Not able to get a good bid at 06, but why would you? But you see that right there is even if you want to take a swing here, you got the wrong spot. You got the wrong side of the hole. Okay. What was that? 3 ticks all at once? Jeez. Maybe a little iceberging at 07 though. Now I'm seeing the Japanese yen starting to move higher, and the dollar is getting chopped down here a bit. It's been hard to trade for the repair of the liquidity. Yeah, I think, well, today in this situation, the it was my own stupidity. But the earlier trade, I kind of feel like that the slipperiness, especially over here in the micros, kind of hurt me. Yeah. It's definitely making it tricky. And now here, the liquidity really is super flighty, isn't it? I mean, like, it's come back. We're almost at 2000s, but it's not ticking up on 2000, right? It's ticking up on like 400. And it's almost every time that the bidder offer completely pulls. Offer pulls, trades up 400. Offer pulls, trades up 400. So the liquidity is not enough to satisfy the demands out there, and so you get in very easy moves. Check out, not easy moves, slippery, very slippery moves. We'll see if they can get above 07.5 here. There you go. Okay, so 09.5 is my next kind of key spot I've got on here. Yeah, Richmond Fed news. Good point. We got here in a minute. Richmond Fed Composite Index, estimate 3, previous reading 5. Although the market doesn't seem to be prepared for that one, so. Now, we're kind of getting in an interesting situation, because if they can get above 09.5, then you start to get into shorts have to cover territory. So it would be funny if this eventually ended up breaking the highs after, if that news ended up being the fuel that allowed them to break new highs today. It's possible still. Okay, a little bit of iceberging on the bid at 09 there. Let's reset that. Recenter to that, rather. Okay. Richmond Fed came in line with expectations at 3. For some reason, I'm not hearing my news squawk. I must not have my must not have voice meter set up correctly. I don't know. Just restart the tab. Big old iceberg at 09, and then they take 09 half offer, but a decent bid at it, and the bids at 09 and 08 half are looking real fatty. This could be a runner here. I might have a good runner here. More risk, more money. Well, that's true. I think the issue that I have in when you get into the volatility is I feel like that there's a less chance that you have an edge. I feel like that when the market becomes really volatile, that it starts to become that the only edge is having a lot of money, you know? And so the more that it's like that, the more that it's like, you know, probably better for me to stay out of it. Okay, so they did get above the seller cost basis. There was a big icebergs there. They actually went bid, and it kind of looked like really encouraging. And now they've kind of fallen back through it. So let's see, they might come back and get pinned at 09 half. I'm not really seeing the Japanese yen back off, nor am I. Well, the dollar is flipping a little bit, though. Jeez. It's hard because I feel like that this has been such a good run here. I only got $10 out of it. Really? Okay. It's like, even when it's going my way, market doesn't seem to be cooperating. Is it just because of the spreads? Nah, that doesn't make sense, because I think that the spread is in my favor in this instance. I guess I should point out this move looks to be mostly correlations retracing and not necessarily being driven by volume in ZN. So the flow's not as favorable as I might think, just because it's ticking up, right? In fact, if anything, there's been some big icebergs and the market orders have sold through them. That's kind of bad sign. See that? I had struggling there because there was a couple of bids that looked okay and they got cut down. And cumulative delta has, you know, when we had that pullback, cumulative delta went to new lows. Okay, well, there's the dollar flipping again. I need to zoom in on the dollar here a little bit. Yeah, there we go. Inside bid offer and continues to be really weak. Like I'm seeing a lot of they can't even put 50 up. Suppose if they end up trading 2000 here, it's 07, that's a bit of a change, but this little pullback back up here to 07 seems to have been a lot of pulling along the way. Now, another thing I want to point out. So the S&P 500 did kind of sell on the news and everything, but like, look, it didn't really hurt the S&P all that much. They continue to trade in a very, 10-point, pretty narrow range for the S&P 500 these days. So the S&P doesn't seem to be too concerned about those numbers. Now if we can just get the dollar to come back down. Yeah, ES is going up. And if ES might break new highs here. Okay. Well, now the 30-year, when you look at the 30-year, it's definitely like, oh yeah, they could totally bust new highs, right? Seller cost basis is at 10 now. Let's clear this above us. We did get the dollar to move down a little bit, but now it's just spinning back in on itself again. Yeah, all the US did on the news was test below the open and return up to... Yeah. No. Don't use this word. Don't use this. You have been propagandized by nonsense. Where you start using the word like liquidity grabs. Not how it works. I think that the news came out. A lot of people sold on that because the number was higher than anticipated. And then the flows that didn't care about that particular news took over. Because there's a lot of businesses going on that's not just the economic number. If you say liquidity grab 3 times in front of a mirror, a wild trading guru appears and wants to sell you a course. Dude. Oh my gosh. That is like the funniest thing that anybody has said in chat all year, dude. That is effing brilliant. Oh man. I don't mean to pick on you, Seven Hat, but go and watch my most recent video about smart money concepts, and and then come back. I mean, there are people out there that like quote grab liquidity, but this idea that like they go and they grab liquidity just to like reverse it on everybody it's not really how it works. That only happens on Forex. I'm gonna bet you that if we could see order flow on Forex, that we would probably find that Forex largely follows the same rules. I think that the Forex, you get kind of the weird behavior that you do because it's an over-the-counter market, kind of the interbank market, you know. And so that's why it kind of does what it does. But I've never seen any studies that tried to explain stylized behaviors of Forex pairs. So... So one of the things that we're getting here is that, like ZN, it's only back 2 or 3 ticks, right? Shouldn't matter too much, but that's like almost all of our profits. ZB came back quite a bit. So that's what's happening, is the range in ZB is quite a bit, actually. And I don't know what it will take to get the ZB to switch around, although it's probably we're probably actually dollar traders right now. It's usually how it goes, right? But I'm getting a little antsy because I think I'm going to have to go and drive a child again. I guess I could do the degenerate thing and just leave it. S&P did break a new high by like a tick and just continues to be this chart is what a lot of technical analysts would call congested. I don't like to use the word congested because it's like, to me, that's like there's a lot going on in there, and a lot of the time when you get bars like that, nothing's going on. But in this instance, I would say there has been actually a lot of trade in here, so it's just like a really dense and tight range here. It's very curious. I wonder if the S&P 500 is a little bit constrained today because you've got Microsoft and Google earnings. You know, like you've got two of the Magnificent Seven essentially going to report today. Maybe they don't want to do anything too big over there. That in this song seems a little too sexual to me. And it's totally the guy that made this song too. That I want to feel like, you know, when I see it tick 2 times in a row like that, it's usually like a good sign and everything, but I really think that it just means that the liquidity is crap right now. Sounds more like a yeah. No, it sounds like oh. No, there's the yeah, but then he goes oh. That kind of has a really it has a really long reverb on it. Yeah, a little too sexual for me. It sounds like they're having, you know. Never mind. This is a kid. Let's keep it clean for the kids. Let's keep it clean for the kids. Yeah. I mean, it sounds like two men, and one is the top and one is the bottom. You know what I'm saying? Right, and the yeah is the guy is the masculine one, and the yeah is the bottom. I don't want the stupid react icon on my chat. And I don't know. Same here. Dude, it drives me crazy because you can't see like the last message. Yeah. It's like the last message. There's like a word always gets covered up. It's so incredible. I don't even know if it works. No, I think that you just furiously push the button all the time. Oh, no. If you mouse over it, it gives you a couple of options. I wish it was more like, what is it, TikTok, where like you can just like click the button all the time, and then when you really like something, you can really click it furiously, you know? And so like the events are going off all the time. I think that's more interesting. Because otherwise, then people like save it. And then because they're saving it, they never actually use it, right? You clicked the 150 to 100 times? Really? Oh, it doesn't even pop up on stream? Oh, well, that is weird. I don't know what to make of that. I was kind of hoping that this was going to give me a little bit of favorable excursion before it was about time to put the child in the car. But no. So I'm going to walk away, and then it's probably going to take off, right? Yeah, how stupid was it for me to hold that? I don't know. Yeah. I mean, because I lost money, I guess I should say it was a stupid thing to do, right? Okay. It's okay. We move past it. I will... Oh, we'll be back, you know. We can have a little... You kind of do analysis and close things up. But I'm going to go and take the child. This one's going to take a little bit longer. Okay, well, that took me a little longer than I thought it would, but doesn't look like the market really done too much, did it? Yeah, oh no, actually, when we left, it was at 07.5, so it looks like they fell down a little bit of a pullback. They're at 07. Scratching the trade was good. We're all... I suppose it could have been worse today. Not the best day for me, though. That was a pretty bad call that I made today. I don't know. I felt like doing something. You notice how every time that I try and do something degenerate, like it blows up in my face? All right. Well, guys, I should get going. So I will see you tomorrow. And in the meantime, stay excellent, team.